Good morning. Welcome to Nasdaq Trade Talks. I'm your host, Joe Malandrino, global markets reporter at Nasdaq, coming to you live from the 85th annual STA Market Structure Conference in DC. Joining me on set is JC Maurcus. He is the Vice President of Business Development over at Fidessa. We're going to focus on compliance and the impact from the CAT. JC, thank you for joining us on set here. Let's talk about the impact of the consolidated audit trail and the impact on workflow and compliance, kicking it off with the workflow impact.
Yeah, it's a great question. It's an important area. Firms are going to have to analyze their impact, not just to their reporting responsibilities, but their workflows in terms of like their systems. The workflows are complex. There's a lot of focus on not just the new asset class that needs to be reported in terms of options, but the existing workflows that have been in place for over 30 years in terms of market making, business flows that will also not have to be reported. They're going to have a meaningful impact on how they think about it.
There's just so much data that is going, like what's being reported to the CAT. It's really a lot to wrap your head around.
Yeah, there's an enormous amount. I mean, there's estimates all the way from 58 billion records that are going to have to be reported in the future. And the big challenge there is the data now has been living for a lot of firms in different silos.
Right.
So they maybe they have multiple systems, different trading, and different oversight for those different. Now you're going to have to integrate all those systems. You're going to have to bring all that data back together, and that's where the challenge really lies.
Right, well, let's talk about the compliance processes. What are the necessary resources that small firms are going to need, large firms are going to need? Because you have to participate in this. There is no opting out.
Yes, that's also a very complex area. A lot of the bigger middle firms are having to analyze, and actually they're looking to shore up and bring in just experts just to handle that new set of requirements. So they're actually hiring just to be able to handle for this new process. And the biggest thing to keep in mind is all firms are going to have to duly report for some period, indeterminate right now. So we're talking years where they're going to have to still submit codes, still submit to CAT. So they're going to bring in, and also you're going to have to be closely partnered with the smaller firms. They're very closely aligned with their vendors to make sure that they're ready.
Right, and that was my question to you. It's got to be more difficult for smaller firms to implement these compliance processes because it's big. It's a big project. So hey, it's great if you're a compliance or operation consultant, but it's got to be hard if you're smaller.
Yeah, we see it with our smaller clients. They certainly lean very hard on us to educate them. I mean, there's a lot of documentation out there. The final specs have just recently come out. There's a lot of digestion and misunderstanding a lot of the details. So they're going to be very dependent on vendors and their partners to be able to solve it. So yes, it's going to have a meaningful impact on the smaller firms. Yeah, right now they're already squeezed by their margins.
So what is it that Fidessa does to support the industry when it comes to CAT?
We do multiple things. We obviously are a big participant of the FIF. Our compliance officer represents vendors in that respect, and we're very active in that community. And also, we're very active with our clients. We actually purposely go out and talk to our clients about how they should prepare for this, and anywhere where they can leverage our resources, our systems. We do that.
All right. Well, thanks so much, JC, for joining us on set, and thank you for joining me throughout the day. I'm Jill Malandrino, global markets reporter.